Alright, crypto fam, let's dive into something absolutely mind-blowing that Dread Bongo just dropped on us. So check this out. He's breaking down what just happened in the markets, and honestly, it's pretty incredible when you think about it. We literally just survived what he's calling the biggest liquidation event in crypto history. I mean, think about that for a second. The biggest ever. And that's not even the crazy part. We also endured the longest US government shutdown on record, watched OG investors dump their Bitcoin at levels we've never seen before, and had pretty much every major crypto influencer on Twitter screaming that we're heading into a bear market. But here's the kicker. Despite all of that chaos, Bitcoin still managed to close above the 50-week moving average. How insane is that? Now, this tweet was from yesterday, and yesterday was Monday, which means we kicked off this brand new week trading above that crucial 50-day moving average for Bitcoin. So, for everyone out there still calling this a bear market, I mean, seriously? Where's the bear case at this point? Don't get me wrong, we've pulled back a bit since yesterday, and I'll be honest with you guys, I was really hoping we'd see that explosive move to the upside continue. But we're just cooling off a little, which makes perfect sense because Bitcoin has hit a pretty significant resistance level. This is actually the same level we saw back on November 3rd, so we're talking just a few days ago. Bitcoin dipped down from there, spent some time accumulating, and now we're testing that resistance again. The good news? We're really not that far from where we need to be. Right now, Bitcoin's sitting at about $105,200. And honestly, that's pretty solid considering where we've been. The Fear and Greed Index is at 31. We're still in fear territory, but hey, at least we've climbed out of the 20s, right? Looking at today's action, we've got a mixed bag, some red, some green. Bitcoin's only down 0.72%. Ethereum sitting at a tiny 0.93% drop. But XRP is feeling it a bit more, with a 3.26% decline. Now, XRP being down more actually makes total sense when you think about it. It was absolutely crushing it over the last couple days, so this pullback is just natural profit-taking. XRP tried to break through that resistance level from late October, that $2.55 mark, but couldn't quite crack it. So right now, we're seeing XRP trading around $2.45. But here's where it gets really interesting, and this comes from the legendary MatsB. The 3-month Ichimoku cloud is showing us just how powerful XRP's bull trend really is. Get this, XRP has never built a base above the 3-month conversion line in its entire history, and it's been doing exactly that for the past year. If you're not bullish on XRP yet, you might want to take another look at this data. When we zoom out to the 3-month chart, each candlestick represents 3 months of price action. And for the last 12 months, XRP has been trading above that Ichimoku cloud consistently. We're currently in this candlestick here, and we just started a fresh 3-month period, probably beginning around October. And guess what? It's still looking incredibly positive. XRP is still holding above that critical metric. Now, bringing it back to Bitcoin, the key level we need to watch is that rejection at $107,000. That's what we're focusing on right now. And it's not just Bitcoin. Ethereum and the total market cap are also getting rejected from similar zones. This just shows us that everything's still following Bitcoin's lead. We're still very much in a speculative market here, and these daily 200 moving averages, both the MA and EMA, are plotting out some seriously significant levels. That $107,000 mark for Bitcoin, that's a big one, guys. That's the level that's going to tell us where we're headed next. So, what do you think? Are you seeing the same patterns I'm seeing? Drop your thoughts in the comments below. I want to hear what levels you're watching. And that level I just showed you, that's exactly where we keep getting stuck. We just can't seem to break above it, at least not yet. But here's what's got me excited. We're actually forming higher lows on the chart. Let me clean this up a bit so you can see it clearly. There we go. Those higher lows are telling us a story, and hopefully we'll continue pushing upward until we finally smash through that resistance and get past $111,000. In my opinion, that $111,000 mark, that's the next major hurdle Bitcoin needs to conquer, guys. Now, Tom Lee is still incredibly bullish, and honestly, I think he's got every reason to be. He just did an interview with CNBC a couple days ago, and what he said was pretty fascinating.
I mean, if I look at everything since October 10th, because that was the biggest liquidation in the history of crypto, like bigger than FTX.
Like a margin call almost.
Yeah, it was like almost a miniature rupture, like a tsunami. We're only a couple weeks from that, so I think the market is consolidating. But if I look at fundamentals, like Ethereum, stablecoin volumes have been exploding, application revenues at all-time highs. So right now, fundamentals are leading price in crypto. So I think eventually we consolidate and then we rally into year-end.
To where, 150?
Yeah, I think we could still get to 150, 200 for Bitcoin, and then something like 7,000 for Ethereum.
So Tom Lee is basically saying we could still see a rally heading into year-end. And you know what? I don't think that's far-fetched at all. Think about it. From a timing perspective, we've still got plenty of runway here. And here's the thing about Bitcoin. It doesn't take as long as you might think to make massive moves. Let me show you something incredible. Back in September, it only took about 100 days, that's roughly 3 months, for Bitcoin to make a significant move. But get this, even within just 76 or 77 days, Bitcoin rallied by about 80%. Can you imagine? So if we project that timeline forward, we're looking at the end of January. But even if Bitcoin doesn't rally for that entire period, and we only get to the end of December or early January, we're talking about 53 days. I could still easily see us doing a solid 40%, 50%, maybe even 60% gain. This is why this moment is so critical, guys. Now, speaking of interesting developments, German analyst Oliver Mitchell took some time out of what looks like his day off to answer a really important question about XRP. Someone asked him why XRP hasn't been rallying, despite getting some fantastic news from Ripple's Swell event last week. His answer? It's pretty eye-opening. Let me translate this for you. So, the interviewer asks about the positive news from Ripple's Swell conference and why XRP is declining more significantly than Bitcoin, despite all this positive news environment. Oliver's response is really insightful. He explains that news and information don't actually drive prices as massively as people think. The crypto world is embedded within the broader financial ecosystem, and that ecosystem is what we need to pay attention to. He specifically mentions that the Fed emphasized on Tuesday that quantitative tightening is now ending, meaning they're no longer pulling liquidity out of the market. And now everyone's waiting for QE, quantitative easing, when the central banks will start pumping money and liquidity back into the markets. So Oliver Mitchell is also waiting for US government policy changes to be the real game changer here. Now, I don't know if you guys have been in crypto long enough to remember this, but Simply Bitcoin just posted something that's absolutely hilarious, but also surprisingly accurate. McDonald's McRib has returned. And historically, every single time the McRib comes back since 2020, it has marked the beginning of a Bitcoin rally. I kid you not. Are we seriously going to start relying on the McRib metric for our trading decisions? Well, let's look at the data. The McRib was reintroduced in mid-2021, and boom, Bitcoin rally. Same thing happened in July 2024. McRib returns, Bitcoin pumps. We saw it again in July 2025, and now, heading into 2026, guess what's back? The McRib. I mean, at this point, maybe we should be paying more attention to McDonald's menu announcements than Fed meetings. What do you guys think about this correlation? Coincidence or the most delicious trading indicator we've ever discovered? Let me know in the comments. And you know what? I had to do my due diligence on this McRib thing because it's just too crazy to ignore. So I checked, and yes, the McRib is officially back at McDonald's for a limited time nationwide. The rollout actually started today, November 11th, 2025. If you're watching this video on release day. So yeah, the McRib is legitimately back, and hopefully that means we're about to see some serious bullish momentum for Bitcoin. I guess we'll just have to wait and see how this plays out. But let's talk about some news that's probably a bit more substantial than fast food correlations. Eleanor Tourette just dropped something absolutely massive. The US Treasury and IRS just gave ETFs and trusts a completely clear legal path to stake digital assets and share those rewards with investors. Think about what this means. Staking is now officially tax recognized, fully compliant, and ready for institutions to dive in head first. This is another huge step forward for crypto ETFs, guys. She was actually retweeting Bill Hughes, who broke down all the details. Here's what's happening. Under the new safe harbor that Scott Bessent announced, trusts can now stake digital assets on permissionless proof-of-stake networks. But there are some specific requirements they have to follow. They need to hold only the digital asset type plus cash, use qualified custodians to manage the keys and execute the staking, maintain SEC-approved liquidity policies so investors can still redeem even with staked assets, keep arm's-length arrangements with independent staking providers, and limit their activity strictly to holding, staking, and redeeming. No discretionary trading allowed. Scott Bessent laid all of this out in detail if you want to dive deeper into the specifics. But wait, there's more. The Senate has officially released their bipartisan crypto market structure draft. And guys, this is absolutely enormous for creating a clear legal framework for Bitcoin and crypto trading in the United States. According to Crypto Russ, the big impact here is this. If Bitcoin and major crypto assets fall under CFTC oversight, they'll be treated as commodities, not securities. And that changes everything. We're talking about cleaner rules, easier exchange access, way more institutional capital flowing in, and real market structure that actually makes sense. This is exactly the kind of regulatory clarity that comes right before we see those large, long-duration institutional inflows we've all been waiting for. I've got a screenshot of the actual draft here for you guys, and again, so you can check it out yourself. Now, what really stands out to me, and this comes from Endgame Macro, is just how comprehensive this bill actually is. This isn't just crypto regulation. This is a full integration blueprint for how digital assets get completely absorbed into the US financial system. And that's exactly what we need. We don't want just little bits and pieces where crypto gets some recognition, but there's no real context or framework. We need full integration into the financial system in a meaningful way. Here's what's really exciting. The CFTC would become the primary regulator for digital commodities, creating one single national standard and bringing those spot markets back on shore. That's a massive deal from a geopolitical perspective because it reasserts US control over an ecosystem that's been scattered across offshore exchanges, tax havens, and regulatory gray zones. But here's what I think is equally important. There's explicit protection for self-custody built right into this bill. It preserves your individual right to hold digital assets directly and transact peer-to-peer as long as it's legal and outside of sanctions.
That might seem like a quiet detail, but it's actually a profound nod to financial autonomy within a system that's otherwise moving toward much heavier supervision. They're basically saying, yes, we want regulation and clarity, but we're not taking away your fundamental right to control your own assets. This is the kind of regulatory framework that could completely transform how institutions view and interact with crypto. What do you think about these developments? Are we finally getting the clarity we've been waiting for? Now, here's where it gets really interesting. And this is what I call the plumbing connection. If you want to understand what's going to plug crypto straight into the heart of the US monetary system, you need to look at the custody and segregation framework. Here's how it works. Every single digital commodity custodian has to operate under bank-level supervision. They have to hold customer assets with qualified custodians, and here's the kicker. They can only invest idle cash in US treasuries or high-quality liquid assets. This design is absolutely brilliant, and it does three critical things. First, it ties digital asset custody directly to the same collateral base that backs the US dollar. Second, it creates steady demand for treasuries, which links crypto liquidity directly to sovereign debt. And third, this is huge. It ensures that if major exchanges fail, your assets are treated as customer property under bankruptcy code, just like your funds would be in the traditional banking system. This is the kind of infrastructure wiring that completely transforms crypto from being this parallel financial system into becoming a regulated tributary of the dollar ecosystem. It's monetary sovereignty achieved through smart market structure design. And here's the geopolitical angle that's absolutely fascinating. This bill isn't just domestic housekeeping. It's actually a sophisticated soft power move by the US government to make sure America stays on top of the global financial hierarchy. It also subtly reinforces America's sanctions power, which is a strategic detail that shouldn't be overlooked. As one analyst put it perfectly, this bill is the bridge between crypto's Wild West era and the modern dollar state. It keeps innovation alive at the edges, but locks the core infrastructure into US jurisdiction and treasury collateral. It's about sovereignty through design, making sure that in a world with borderless digital value, the pipes still run through Washington's plumbing. That's incredibly strategic and well structured when you think about it. Speaking of strategic moves, Scott Bassett has been discussing this major capital shift toward blockchain technology. And guys, this is a massive pivot we're witnessing. The financial system is literally going to run on cryptocurrencies like XRP in the future. Listen to what he has to say.
We will take a close look at regulatory impediments to blockchain, stablecoins, and new payment systems. And we will consider reforms to unleash the awesome power of the American capital markets. Americans deserve a financial services industry that works for all Americans, including and especially Main Street.
And that's exactly how this whole framework has been structured. It's designed to work for all Americans. At least, that's the theory behind it. Nate Gerasi also commented on Scott Bassett's statements, and it really puts things in perspective when you think about where we were just 2 years ago with Gary Gensler's SEC. Remember this? Just 2 years ago, we had SEC Chair Gary Gensler indicating that proof-of-stake tokens were securities. Fast forward to today, and we have the US Treasury Secretary providing tax clarity on staking within ETFs, and institutions can now hold those very same proof-of-stake tokens. We have come so incredibly far, guys. Like, seriously, the transformation has been absolutely mind-blowing when you step back and look at the bigger picture. You know what's kind of frustrating, though? We still have Bitcoin maximalists, like Dave Weisberger, I think that's how you pronounce his name, commenting negatively about XRP's utility and price potential. I don't know if you guys remember, but he actually made some comments calling the XRP community dumb not too long ago. I'll find that video and link it up for you guys. I covered it fairly recently. But here's what's interesting. He acknowledges that Ripple is creating a very serious institutional business, though he claims none of it involves XRP. Here's a clip of Dave Weisberger speaking on a panel about this.
The company wants to promote the token by words because they own so much of it and it's so helpful to their balance sheet. And the community cheers everything that the company does. So the company is building a real business, like a very real business. in terms of bringing custody, prime brokerage, not just for crypto, but FX prime brokerage together with Hidden Road, wallets, etc., trying to build a vertically integrated business that is on the scale of, for lack of a better word, in many respects, the institutional business that Coinbase has. That's a very real business. None of that has a damn thing to do with XRP, except for two things. One, there will be some products that might use the ledger, but not really clear how much demand that will cause. And two, XRP is enormously important to their balance sheet as collateral.
So in that Twitter Spaces discussion, he talks about Ripple as a company. But in this next clip, he gives his actual take on XRP compared to Bitcoin. This is a clip that Dave posted directly himself. Now, rather than just playing the whole thing, let me walk you through his logic. The first part of his clip is about 8.5 minutes long, where he talks about Bitcoin fundamentals, why people invest in Bitcoin, holding it as a store of value, all the reasons Bitcoin will continue going up. Then he compares that to XRP. What's interesting is that he gives what he calls a base case scenario. He talks about how XRP can't reach completely exorbitant prices just because of utility alone. However, and this is key, he still thinks there's significant room for price appreciation in XRP. He actually holds XRP himself. Here's what he says.
When it comes to XRP and every other token, your path to value has to be the same as with an equity. It has to be that the network itself that the token represents will earn revenue, and the token holder will one way or another get a piece of that revenue. That it can be by direct profit sharing. It could be by the fact that tokens get burned as revenue is earned. It could be by you need to own it in order to use the network, in which case it's a user fee. But no matter how you want to look at it, there has to be a reason for that. Now, the numbers of potential revenue are potentially massive. There's no question about that. But the one thing I know from history is that when you have a utility, something that's like a commodity that is switchable, that the companies that control the financial system and the ones that will control the financial system can switch from one network to another if the cost gets prohibitive, it will restrain the cost of that network and therefore the value of those tokens. And so understanding that, my mental model for XRP isn't that it can't be an investable asset. In fact, it could appreciate a couple of times from here easily without violating any of the things that I'm saying. And to me, that makes it a potentially good investment. Now, I'm not saying it's a great investment. I'm not recommending it. I don't care. I decided that it was worth a position, and so I own a position. But what gets me completely crazy are these idiots who talk about this in terms of $10,000 prices or $1,000 prices. Understand the math. Everyone tries to compare XRP to Bitcoin. There are quite literally 5,000 times more XRP tokens than Bitcoin. So if you're going to divide by a Bitcoin price, even to get to equality, you literally have to divide by 5,000. That means, just for simple math, guys, that if you think XRP is going to approach Bitcoin, that $21 is where you're expecting. So understand what that means. If you think it flips Bitcoin, you're saying 21. So those people calling for 1,000 are calling for something that is, quite frankly, on its face absurd.
All right, I'm going to leave it there, though there's more to the clip if you want to check it out later. But did you hear what he said? It's not that XRP won't go up. He actually did some pretty basic math that's worth walking through. Bitcoin is currently at about $105,000. We'll round it to 105K, just to make the math simple. Now, he points out that there are literally 5,000 times more XRP tokens in circulation than Bitcoin. So if you take Bitcoin's current price and divide it by 5,000, you get about $21 per XRP token. He's essentially saying that if XRP were to flip Bitcoin in market cap, it would reach around $21 per coin. But here's my take on this. Flipping Bitcoin isn't actually that crazy of a scenario when you consider the utility-based case behind XRP. There's real value being created here, actual money moving through the XRP ledger for real-world use cases. And let's not forget what David Schwartz, Ripple's CTO, has said multiple times.
XRP actually needs to be at a high price to function the way they originally intended it to work. So Dave, are you telling us that $21 is the best case scenario for XRP? Because honestly, I'll take $21 all day long. From where we're sitting, at around $2.45 right now, that would be roughly a 750% gain. That's just my opinion though. What do you guys think? Is $21 realistic? Or could we see XRP go even higher than that? Let me know your thoughts.